Hello, everybody, and welcome back to the Crypto Club podcast. My name is Gons, and of course, we're here with Mr. Hobo. Say hello, Hobo.
Hello, hello. Lovely
Welcome back to
evening.
another Friday. A lovely evening, my friend. We are very down in the crypto market right now.
Yep, yep. Feels bad, man.
Oh, man. Bust out your McDonald's application. We're going to pull up the charts for most of the crypto projects and just do a brief discussion on what happened this week and
Right,
what's
right.
going on.
Yeah, plenty of things to talk about. Right, quite the eventful week in the crypto markets. Moving on to Coin Market Cap here. Just looking at the top 100 coins. Man, I mean, we had a quite the bounce over the last day or so, but I mean, look, we've got AVAX down 41% on the 7-day time frame, even after this bounce. Shiba down 33%, Bitcoin down 7%. I mean, when we were in the heat of the crash, we were looking at a lot of the top 100 coins down 50% in a week, which is just massive, But at the same time, if you're a crypto veteran, this is something that happens. Sure, it doesn't feel great, but you know what? What goes up must come down, right? Just looking at the Cardano chart here. Oh man, peaked at like just about $3, sitting at 54 cents right now. That is tragic. A lot of people losing a lot of money. Not to mention the whole Luna fiasco, which we'll dig into in a little bit here. But yeah, lots of pain being felt everywhere.
I think it goes beyond the dollars lost because at the end of the day, it's money and money shouldn't really drive your life. Um, where this really hurts crypto is the retail investors. Um, I saw a lot of posts and tweets, and one that really stood out to me during this week is a guy who seemed like just a normie, probably joined crypto in November, and he's like, I invested and went to zero two times, and then I got more capital and I invested that, and I figured instead of playing around with the middle to low market cap coins, I would invest in a top 10 crypto, and he chose Luna because of the staking rewards. And so to see a top 10 crypto go down 99% 3 days in a row
Right,
as a
right.
top 10 crypto, I mean, that as a retail investor, that's just the biggest get out of crypto flag you could ever see in your life.
Mm-hmm.
Um, so I have a feeling that the next few months are definitely going to be very slow and organic, which isn't a bad thing. And history has always shown us that these are the times when you really do want to stick around. You don't want to join in, in November of last year when everybody's hyped up, all the celebrities are buying NFTs. That's the top. So I'm not saying this is the bottom, but this could be, or it could be close. But these are the times you want to stick around and maybe even contribute to the space, help build a protocol or a platform or tools or, smart bots, whatever. But these are the times where the people who really stick it out and are determined to see crypto grow will usually be rewarded the most.
Right. Yeah. No, I agree. Really. Everyone's a genius trader in a bull run, right? It's not very hard to make money. Uh, Bear markets are a lot different, and it's a cycle that comes and goes, just like the bull run. I know it feels like everything is ending and everything's going to go to zero when you're in the heat of it. But, really, all markets run in cycles. Things go up, things go down. And right now, we're just at the lesser fun part of it. So, I have no doubt that we will rebound eventually. How long it takes, I have no clue.
And
We'll
so
just have to
the
see.
other thing too is that when we do enter these phases, we enter these phases because people stop following fundamentals. So what happens is people overinvest and they start watching charts daily or, every hour. And so then it doesn't become investing, it becomes just quick rotating and aggressive profit taking. And what it does is it ruins charts, and it pushes away retail, and then it lowers capital in the space, and then you start seeing crashes and exploits because now people are hungry and they're
Right.
seeing, well, rather than investing, let me see what I can do to, get some quick money, or maybe hack this platform or this swap or this protocol.
For sure.
So in a way, the crypto market brought it on itself to an extent. We'll talk more about Luna in a second here. But it goes back to fundamentals. I think this will take us back to quote unquote the good old days where people just invest, what they can afford to lose, and they hold it for longer than a day or two.
Right.
And personally, I'm excited for that because, and of course, you have to adapt your trading styles in every market, but that is probably one of the better, less stressful environments to trade in and invest.
Right. So, yeah, I mean, looking at a coin market cap here, we can see Tether briefly depegged to, I want to say it was 95 cents or something. So, yeah, just about 95 cents here. Yeah, not great to see, but when you look at the history of Tether, it's not uncommon for it to depeg slightly. I mean, 95 cents is quite the dip, but, we're rebounding here looking to basically be $1. But, I'm sure this is going to bring up some examples that the U.S. government, at the least, is going to use to justify regulation. I mean, Yellen already mentioned UST, and if we look at USDC here, USDC actually went up to, let's see, what is this? Oh, almost $1.01. Looks like more than it is right here, but I know that on Uniswap, USDC was nearly $1.06 for just a little bit, and we got right here Binance USD seeing that same spike. So if anything, I think this is signaling strength in certain stable coins, right? Like obviously, even though Tether has the largest market cap out of all the stable coins, I think it's safe to say that Tether is the least trusted, then followed by USDC, Binance, right? And, while Tether depegged to the downside, USDC and BUSD depegged to the upside. So, I mean, pick your poison at the end of the day. Stable coins should definitely be stable, but I would personally rather have my stable coins be worth more than be worth less.
And again, it comes back to the greed that happens in those times in the market because again, people stop following fundamentals. If you're going to invest in something, or even worse, if you're going to put your assets into a stable coin, you're trusting that stable coin to hold its value. It's basically a bank in,
Yeah.
for your purposes. So you need to figure out, okay, how does this bank work? What are they doing with my money? And how do I know that they have the money when the time comes for me to pull it back out?
Right.
And so, you know, I did my due diligence months ago when I stabled, and I'm like, where am I going to put my assets? Because I do not want to have an issue or have a hack that liquidates my savings. And I
Mm-hmm.
did my research, and Tether was one of them that I definitely came back after researching, and I was like, I am not touching Tether at all.
Right.
Um, and Luna also was questionable for me because it's an algorithmic stablecoin. And again, when there's also they're fundamental for a reason. If it's too good to be true, if you're being offered 20% APY for staking, stop and think, where is that coming from and is that sustainable?
Mm-hmm.
So it's due diligence. I mean, we have to go back to these times so that we can get rid of all these, scam hype coins, meme coins, fake stable coins, pseudo stable coins, pseudo projects. And we need to go back to just developers developing good utility, good projects, good protocols. and people sticking to fundamentals, doing their research before they invest.
Right.
I mean, it was a completely backwards market for the last 6 months, realistically,
For
where
sure.
people were not doing research, FOMOing, ooh, 20% APY, let me stake all my money in there. I mean, I have friends that their whole portfolios were in Luna staking and UST,
Yeah.
and they can't even touch it for the next 5 months. So,
Yikes.
like, I would be freaking out. And it boils down to users need to understand that there's a lot that goes into crypto, and you need to do your part and research and not just take word of mouth and not just give into FOMO and actually see what's going on behind the scenes.
Mm-hmm. Yeah, no, I mean, I definitely agree with that last part. I would say that, you started off saying that it comes from greed, and I think I'd say it comes from more fear than greed, right? Like when, sure, with the whole Luna fiasco, there was some players that came out with massive profits, because they saw the whole thing happening, but really it stems from fear and people not wanting to be in these coins anymore because of the state of the market, right? It's like everything's fallen, everyone's rushing to stable coins. I mean, plenty of people are taking losses and just stabling up even though they're in loss just because they're scared. I think it has to do more with that and something similar to a capitulation, like who knows if this is as bad as it gets, who knows if we'll see worse. But really, I don't think that, this whole stablecoin situation is stemming from greed at all.
It does, to an extent anyway. And it's the whole market situation because, I mean, NFTs were the same thing. The NFT space became oversaturated with greedy developers and artists that were just pumping out, NFTs for quick cash grabs. Same thing with all these stable coins. I mean, and with Luna's CEO, this isn't his first stablecoin attempt. I mean,
Right.
so there is a level of greed to it. And the reason I say greed is because when you are blinded by greed, you abandon fundamentals and logical thinking, and you just want the quick profits.
Sure.
And so, or whatever, the quick satisfaction, whatever you're trying to achieve. And
Mm-hmm.
so you don't read that whole white paper. You don't, go into that Discord and analyze the community and see, if there's like real actual sense of community in that project. You
Right.
don't read the contract. You don't go to the website and analyze what's going on. You just throw your money in and hope for the best.
Yep. Yep.
That to me is either greed or FOMO, but they there is a there is a blur in between both because they both stem from the same thing.
Sure. Yep. Yeah, I don't know. I see what you're saying. I think, surely in the whole Luna situation, there's surely a good bit of greed involved with the foul actors in the situation. I mean, I know that there's one that profited roughly 800 million on the collapse, but I think in a broader term of the market, I I don't think that this is a state of greed. I mean, even the greed fear indicator is, I mean, we're like peak fear, and I mean that's what I'm more referring to is the whole situation, like resulting in these stablecoin unpegs, not particularly UST, but just like even the top five stablecoins slightly depegging. I think it's just because there's tons of fear in the market and everyone's rushing to what's supposed to be dry land.
So let's transition to, well, what some people argue is the whole reason we are experiencing this crash is the whole Luna situation.
Right. Yep. So starting with this article here, it says Luna crypto crash. What happened to Terra Luna? Previously a top 10 coin, the Luna crypto crash has seen it drop over 99.9%. The last 3 days of the Luna crypto crash saw Terra's Luna crypto plummeting to an all-new low, crashing hard in terms of pricing, with its stablecoin Terra USD losing its peg. At press time, the price of Luna has fallen 99.9% and currently sits at, oh man, what even is that? Let's see, 0.00002 cents. UST is down 84.9% at 15 cents. With this crash has come talk of a Luna delisting too, which has actually happened at the time of this podcast on quite a few exchanges. So while Luna recovery plan is in the works, albeit not yet working, what compelled the Luna Terra USD prices to plummet? The Luna crypto crash comes from its link to Terra USD, also known as UST, the algorithmic stablecoin of the Terra ecosystem. UST is an algorithmic stablecoin and is operated via computer codes that help maintain its price equilibrium. The process involves burning or minting Luna/UST to maintain the price of these tokens. So essentially, it's a form of arbitrage, but we'll dig into that more here. So when a UST is minted, $1 of Luna is burned. While this also happens the other way around for Luna minting and UST burning, as UST threatens to go below its peg, holders will sell their UST or burn it for $1 of Luna, making a slight profit. This is until UST rises above $1 when the opposite encouragement happens. After a large amount of UST was dumped, the stablecoin started to depeg. More UST was sold in mass panic, minting more Luna and increasing its circulating supply. This had the knock-on effect of then crashing the price of Luna. According to Wu Blockchain, some 46 million Luna was issued on May 10th, with 1.2 billion UST burned. This number seems to have increased further on May 11th and May 12th as the prices drop further. So I mean, essentially, it was, every time someone gets rewarded in UST, $1 of Luna is burned. And so everyone was pulling out their UST and it was minting Luna to keep up with the price of UST falling, which, inevitably massively increased the supply of Luna, and therefore just causing the price to crash, right? Like if you have the same amount of money in a token, but you keep increasing the supply, the price is obviously going to go down. And so, it was just mass panic that just spiraled into literally nothing.
Yeah, as of today, I think they already minted like over 40 billion Luna.
Right.
And it might actually be more now. I'm trying to find it now, but it's no longer in the millions. Like they had to mint billions of Luna.
Yeah, let me see here. The supply chart. I'm sure we'll get something up here. Luna circulating supply. Oh my.
That's not good. What is it at?
Let's see. Well, I'm not sure. Oh, this is I don't know. I can't tell. Okay, here we are. So yeah, the supply of Luna. Oh my God. It went from just around 342 million to, let's take a look. 343 million all the way to 170 billion. Yeah,
I think it might be more. I'm seeing some people tweeting that it's in the trillions.
Yeah, I don't know. According to this chart, you can see we've got the price of Luna paired with the supply of Luna.
Oh,
pretty stable right here at.
There's a bot on Twitter called Luna Circulating Supply that updates it every 15 minutes. As of 30 seconds ago, it is 6.53 trillion.
Jesus Christ. Oh my God.
And that adds up with what I've been seeing as well. Because it was like 34 billion a day or two ago. So,
right.
And it's again, going down 99% every day.
Craziness.
So yeah, absolutely insane. What are your thoughts on the whole Luna situation,
Uh,
though?
I think it is terrible for the market. I mean, even institutional investors lost all their money in this whole situation. I mean, like so many people lost tons of money. And you dig into Do Kwon's personality. Uh, quite the rather arrogant person. Plenty of people tried to warn him of such a situation occurring. And his response was pretty much just calling them poor.
Poor or dumb,
Yeah, which like
and in much worse words than that.
right. I mean, it's the classic story of Icarus, right? You fly too close to the sun and you get burnt. Um,
Yeah, I mean, many are arguing he is single-handedly responsible for this whole market crash.
yeah.
What are your thoughts on
Mm, I don't know. It's really hard to say. I think it's definitely had an impact for sure. But, there's also plenty of other factors going on all the time, right? Like, it's really hard to pinpoint a percentage increase or decrease just to one catalyst. But, yeah, I think
that? Yeah,
it's far more
I get where you're
negative than just the
from.
price of Luna. I mean, it impacts the culture, impacts people's trust and feelings towards crypto,
Exactly.
and it's surely going to be a gateway for regulation from governments alike. I mean, of course, that is something that the crypto space needs, but yeah, it'll just be interesting to see what happens. I just know that I'm glad that I was not in this token. I mean, I know some friends that were, and like seriously, like they saw a Depeg at first, and they got out instantly, dodged a massive bullet. But yeah, craziness.
No, yeah, and I mean, some people don't check crypto every day. And again, this is a top 10 project, right?
Right.
And it goes to show you that we're very early in the crypto space to where something like this is a top 10 project. Like,
Mm-hmm.
this is the equivalent of one of the top 10 leading auto manufacturers in the world putting out cars that 6 months after you own them, they completely fall apart while you're driving them. Like,
Right.
it's unheard of. Like, maybe if you bought like this brand new car company that just came out yesterday, like, yeah, you might expect, some loose nuts and bolts, but
Mm-hmm.
buying like a top 10 anything, you're expecting really high quality security and stability.
Right.
So, as I said earlier, this definitely put a lot of distrust and a bad taste in the mouth of retail investors.
Yep.
And I I don't believe this was single-handedly the reason for the crash. I think this greatly accelerated it. Um, because I mean, when you start seeing stablecoins depeg, like, you get your money out of crypto. That's what any normal person would do.
Mm-hmm.
So I don't blame them. But at the same time, too, it is almost like a blessing because the reality is, had this not happened, we were probably going to continue trading sideways for quite a while.
Sure.
Whereas this has accelerated it to where hopefully we can have a bit shorter of a cycle and move forward from here.
Right. Yeah. Um, I think a lot of that is going to have to do with how world economics look as they evolve. I mean, sure, Luna was a massive catalyst, but I mean, things aren't looking great in the first place. So, um, yeah, I don't know. We will see what happens, but let's see. Moving on with the latter part of this article here, Luna recovery. Do Kwon reveals recovery plan. So Kwon took to Twitter to share details of his Luna recovery plan. He said he is now in the process of stabilizing the unprecedented crypto price crash by introducing a mechanism for collateralized UST. Stablecoins like Tether and USDT are collateral-backed stablecoins with their values being pegged to $1. This is unlike algorithmic stablecoins like UST, which do not possess any collateral and work through algorithmic smart contracts to maintain price equilibrium. The mechanism involves burning and minting UST/Luna to retain price stability. Quan explained why Luna and UST had dropped so dramatically. In his Twitter thread, he said, "The price stabilization mechanism is absorbing UST supply, over 10% of total supply, but the cost of absorbing so much stablecoins at the same time has stretched out of the on-chain swap spread to 40%, and Luna price has diminished dramatically." To start the recovery process, Quan gave further information. He said the only path forward would be to absorb the stablecoin supply that wants to exit before UST can start to repeg. Quan proposed to increase the base pool from 50 million to 100 million and decrease pool block recovery from 36 to 18. This will be followed by accelerating the minting capacity from 293 million to 1.2 billion to help absorb the UST in circulation. This will help UST to rebound to its earlier dollar peg. Do Kwon later contended that once the UST ecosystem has been stabilized, he will bolster efforts to collateralize UST. However, he did acknowledge his proposal would not be without its impact. Naturally, this is at a high cost to UST and Luna holders, but we will continue to explore various options to bring in more exogenous capital to the ecosystem and reduce the supply overhang on UST, said Kwon. Since Kwon made his initial proposal, alternative options have been proposed by the community. A Luna Go Forward proposal by the Terra Builder Alliance offers a major shakeup that includes a new Luna and UST backed by collateral instead. So is Luna recovering? In terms of sheer price, Luna has not recovered, but is instead at an all-time low. At press time, the price of Luna is 0.000029, a decline of 99.9% the last few days. For context, Luna's price at the start of May hovered around the $80 mark, and I want to say that its all-time high was roughly $110. The supply of Luna is one explanation for the sharp drop. On May 12th, there was over 13 billion Luna in circulation, compared to 343 million Luna prior to this crash. As of May 13th, this has jumped to 6.5 trillion Luna. After Kwon made the recovery announcement, Luna's price did slightly increase to $4.55, but subsequently fell back down even further. Terra USD rebounded slightly since first losing its peg. It reached 61 cents, up 100% on its low of 29 cents on May 11th, but has dropped further below the $1 mark. UST is now trading at 15 cents. So, I mean, that is just terrible for the ecosystem. You know, I honestly doubt it's going to be able to recover. But, you know, we'll see if Do Kwon has any plans. I know that he's bringing on some external help. A member of the crypto community that has famously saved a handful of other projects. But, you know, it's really not looking great.
No, I don't see it recovering, and the main issue is I don't see people trusting him in the future. I 1000% would not. I mean, it's just a lack of leadership on his part that really speaks volumes. So,
right.
I would personally never put any money in any of his projects. So, I don't see it recovering from here. But I do appreciate that he's at least going to some lengths to try to rectify the situation for people that lost money. Hopefully, it works out and people can, you know, get their money back. But as is normally the case in these situations, that rarely happens, or it rarely reaches that extent where people get their full amount back.
Yeah. Yep. Not looking good. You know, hearts go out to anyone that was unfortunately involved in the situation. But, you know, hopefully everyone sees this as a learning lesson to make sure that you do your research. You know, I mean, when you learn about how Luna actually operates, you know, I mean, it's easy to see how this would have been a possibility, as it was called out many times before, just analyzing the tokenomics. You know, and I mean, sure, it takes time and learning and research, but I mean, really, you need to know what your money is in, right? People hear 20% APR, and it's just like a buzzword, and people just want to throw their money in. And things
and
like
not
this
do
can
their due
happen.
diligence. Yep.
Yeah. Yeah. So
And that's
let's
the other thing too. Hopefully, it encourages people to really research and understand what happens so they can avoid it in the future.
right.
So yeah,
100%.
let's move on to the next one.
Yeah, let's do it. So, looking at this article from the Daily News here, it says New York City Mayor Adams has lost as much as $5.8 thousand on crypto investment due to market volatility. So, Mayor Adams may have some buyer's remorse. After fashioning himself as a cryptocurrency booster on the campaign trail last year, Adams converted his first 3 City Hall paychecks into Bitcoin and Ethereum, two popular digital currencies that have dropped precipitously in values as part of the massive market sell-off that began May 4th. As a result of the market plunge, Hisner has lost upwards of $5,800 on his much-hyped crypto investment, according to Daily News analysts. Within,
That
within,
picture of him is hilarious.
I know it is. I think that's how a lot of us feel right now. Um, With an annual wage of $258,000, Adams collects bi-weekly paychecks worth $9,924 before taxes and other deductions, according to a City Hall official. $10,000 every 2 weeks, that's not so bad. I'm sure he's doing just fine. The official declined to specify Adams' deductions, but for the sake of calculating an estimated loss on the mayor's crypto investment, the news ballparked his tax rate by using Smart Assets digital calendar. The calculator, which takes federal, state, and local taxes into account, estimated that someone living in New York City with Adams' annual wage would have a 40.6% tax rate. That means Adams' take-home pay on his biweekly paycheck would be $6,405, according to Smart Asset. That in turn means Adams has dumped an estimated $19,215 into cryptocurrencies between his first 3 paychecks. As City Hall would not provide a breakdown, the news evenly divided those funds between Bitcoin and Ethereum for his calculation. I wonder if this guy's buying the dip.
He probably should. Welcome to crypto. I
Yeah.
mean, if you only lost 5.8K, you're doing pretty good.
Yeah, for sure. If he really did his research, he shouldn't be feeling the pain too bad. That 25% down on your $20,000 investment, not too bad, especially for crypto, where you can invest in Luna and lose 99.99%.
Exactly. But I mean, just really funny overall. Kind of funny that this is even an article, but
Right, right. I know they're just digging into the New York City mayor just losing $5,000 on crypto.
if
Uh,
anything, we might get a good meme out of it because that picture is 10 out of 10.
right. Right, so let's see. The crypto market hit one of its deepest lows ever this week with a wave of sell-offs, erasing more than $200 billion in value on Thursday alone. And it is worth noting, like, we did see a new low for Bitcoin. I think it was either May or June when we really had the last big crash where we fell straight from the first all-time high of like $64,000 down and touched 29,000 very briefly. I want to say we hit like 26,000 like 2 days ago, which is just brutal.
Yeah, it happens.
It does. It definitely does.
I think
And
will
if
happen in the future.
right. Yeah, if history teaches you anything, you just got to hang tight. So let's get on to the next article here. Coinbase earnings were bad. Worse still, the crypto exchange is now warning that bankruptcy could wipe out user funds. Isn't
This
that
is such a
lovely?
scary, scary article. I mean, we
Right.
talked about this a few weeks ago. Like, there's such an important aspect to DeFi, and you need to you need to have responsibility and you need to have control over your assets. This is scary. Like what they announced is basically that they're they're gonna treat you as like investors that if you lose all your money, that's on you.
Well, not even that. They're saying if they lose all their money, that's on you, right?
No,
Like,
exactly. Like if Coinbase goes bankrupt, which is what they're, what they put out,
Mm-hmm.
then any funds that are on Coinbase, they're going to classify you as an investor so that they don't
Right.
have to pay you back.
Right. Yep. So, yeah, pretty frightening stuff, but let's get on with the article here. So it says hidden away in Coinbase Global's disappointing first quarter earnings report, in which the U.S.'s largest cryptocurrency exchange reported a quarterly loss of $430 million and a 19% drop in monthly users, is an update on the risks of using Coinbase's service that may come as a surprise to its millions of users. In the event the crypto exchange goes bankrupt, Coinbase says its users might lose all the cryptocurrency stored in their accounts too. Coinbase said in its earnings report Tuesday that it holds $256 billion in both fiat currencies and cryptocurrencies on behalf of its customers. Yet the exchange noted that in the event it ever declared bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings. Coinbase users would become general unsecured creditors, meaning they have no right to claim any specific property from the exchange in proceedings. Their funds would become inaccessible. So I mean, it's basically Coinbase saying, if we go bankrupt, we can rug you and take all the funds you have in our exchange. That's why tons of people, and myself personally, always advocate for self-custodial wallets where you really have true ownership over your assets because, although exchanges are supposed to be safe, they're really not. And there's people behind the wheel controlling it, and at the end of the day, they can do whatever they want within legal reason.
Yeah. And I'd go as far as to say, not even just wallet, but get yourself a ledger or um, Trezor, something where it's a cold storage wallet, and really protect your assets because nobody's going to do it out there for you. And I've been in crypto since 2015. I was actually one of the victims of the BitGrail hack. I had like 10K on BitGrail, and the guy shut down the website, and all you could do is just look at your money on the site. Couldn't withdraw it, couldn't do anything,
Ugh.
and to this day, I never got it back.
Oh
And
no.
that was 10K in crypto back then. It's worth
Yeah.
a metric amount of money right now.
Sheesh.
So that was an expensive lesson. I mean, the whole theme of crypto is its cycles and its lessons. Those who
Mm-hmm.
stick around during the hardships learn valuable lessons that allow them to succeed in the future, and they sometimes try to pass that wisdom on to new people, new adopters. Some people listen because it's said every time that you invest in a project, don't invest more than you can afford to lose. Don't keep your assets on an exchange. Have your own, crypto wallet. All these things, do your own research. And some people listen and some people don't. Some people get wrecked and some people learn from it. So hopefully some people, have already learned this and have, custodial wallets or cold wallets. If you're one of the people that doesn't, I would encourage you to maybe take this podcast as a sign to go get yourself a Trezor or a Ledger, or at the very least, like a fresh, brand new, not connected to anything wallet, and really, really take on that responsibility and secure your assets.
Right. Yeah. No, I 100% agree. That's a interesting anecdote you have being a part of that exchange fraud in 2015, and God knows how much that crypto is worth now. Um, but literally the next line in this article says that shouldn't happen, and that's as simple as it gets. This should not happen, and people should have the right to their funds that they have put in, even if it does say in the fine print that they will be used as, let's see, what's the terminology here? General unsecured creditors. That's not right. So the story goes on to say an individual's ownership of cryptocurrency is supposed to be immutable and absolute. That's one of the key selling points touted by blockchain evangelists everywhere. But when a user creates a Coinbase account, they often end up storing their cryptocurrency in a wallet controlled by Coinbase, which means the individual is giving away at least part of their control over their own funds. So, yep, that's pretty much just reiterating what we just explained. Really that sums it up. You've got your crypto and exchange, unless it is explicitly stated by the exchange, they can do whatever they want with your crypto, and that's not something I want being done to my holdings. So I keep mine in a self-custodial wallet. As Gon said, ledgers are even better, but just be careful and know what you're getting yourself into. Crypto is quite the treacherous market if you don't know how to maneuver properly. Surely there's trials and tribulations, just like there are in any new venture with life, but you just surely got to be careful and make sure you are doing your research.
Well said.
Yeah. So, that about sums that story up. Let's get on to the next one here. We got crypto mega billionaire Sam Bankman-Fried has seen his net worth cut in half amid the crypto crash. Here's how much several other heavyweights have lost. So, we all feel like we're hurting. Imagine these guys that have billions in crypto, and it just...
This will make you guys feel better.
Right. It just gets sliced in half. So the crypto crash has slashed the net worth of billionaires like Sam Bankman-Fried, Mike Novogratz, and others. Coinbase's founder has seen his wealth drop from $13.7 billion to $2.2 billion per Bloomberg data. Here's a roundup of crypto heavyweights who've lost big amid the sell-off. A broad crash across risk assets spread to cryptocurrencies this week, dragging down the net worth of industry titans as A broad crash across risk assets spread to cryptocurrencies this week, dragging down the net worth of industry titans as Bitcoin and Ethereum plummet and stablecoins spiral. FTX's Sam Bankman-Fried's fortune has been slashed in half since the end of March, according to data from Bloomberg Billionaires Index. The crypto exchange CEO's fortune now sits at about $11.3 billion. So, still doing pretty well, but sliced in half, that cannot feel good.
That hurts.
Right.
Coinbase is even worse.
Yeah.
We went from 13.7 billion to 2.2 billion.
Yeah.
That is 83%. That's harsh.
Ridiculous. All right, and then we've got the Winklevoss twins, Tyler and Cameron, co-founders of crypto exchange Gemini, who have each lost roughly $2.2 billion in wealth, about 40%. And then meanwhile, the net worth of prominent crypto bull Mike Novogratz, CEO of Galaxy Digital, has sunk from $8.5 billion to $2.5 billion, Bloomberg data shows. Novogratz has voiced support for Terra USD, the stablecoin that's made headlines this week for its near total collapse, along with sister token Luna. I wonder if he had a bunch of money in USD.
Sounds like it.
Right. So, the story here in kind of a market wrap-up. It says, on Wednesday, Bitcoin dropped below 25,500, its lowest since December 2020, and more than 60% below its high of 69,000 reached in 2021. Bitcoin was trading around $28,320 at 9:50 a.m. Eastern Time. Ethereum moved below 2,000, hovering around 1925. So,
well, moral of the story is there's somebody always doing worse than you. So don't feel 100%. Too bad.
Right. Really, the man who's got to be feeling the pain the most would have to be Bitcoin's top holder, and we all know that's Satoshi. So unless you're Satoshi, there is someone doing worse than you.
Exactly. But hey, part of the game, and yeah, just really crazy to hear that some of the big heavyweights have lost so much.
Right.
But let's move on to Binance delisting Luna.
Yep. So this actually already happened, I believe, at least the future contracts. But so this article is saying Binance will delist Luna/USDT contracts as price falls below half a cent. The major crypto exchange said on Thursday it would delist the trading pair if the price fell under half a cent, which has already happened. Major crypto exchange Binance announced it will be delisting its Tether / Terra futures contracts following a more than 99% drop in price. In a Thursday blog post, Binance said it would be undertaking precautionary measures around its perpetual contracts, intending to delist the pair if the price goes under half a cent. The announcement followed the exchange changing the leverage and margin tiers for the Luna tied contracts on Wednesday, with the maximum leverage set at 8 times for positions under $50,000. In addition, Binance said it would be launching Binance USD margined Luna futures contracts on Thursday, seemingly as an alternative investment vehicle should it delist Luna /USDT. According to the exchange, it has experienced slowness and congestion, causing a large number of Terra network withdrawal transactions to be marked as pending. The Luna price has fallen more than 99% in the last 24 hours, reaching less than half a cent at the time of publication, following a mass sell-off. At the time we are recording this, I think they've added 2 zeros to that number, so it's fallen another 99.9%. The volatility has affected many tokens across the crypto market, with Bitcoin dropping under $27,000 to a 16-month low and Ether under $2,000 for the first time since July 2021. Binance delisting what was once a top 10 token, terrible sign, right? I mean, we've already spent tons of time talking about the whole Terra and Luna fiasco, but really that's just the icing on the cake, right? Closing the coffin, getting delisted from Binance.
Yeah, you know you're down bad when that happens. The interesting part, so I've been shorting Luna the past few days.
Right.
And what I noticed across the board, it's not only Binance, a lot of the exchanges, tier one exchanges, were delisting or pausing futures options for Luna. And I mean, there was some insane stuff going on the past 3 days on these futures platforms. Everything to trading being paused at random times when, like, right as big spikes down started happening. Um, I have a feeling a lot of these exchanges lost massive amounts of money from this.
Yeah, I'm sure. All you had to do was short, and it would go 99% down every day for like 3 days.
Every
So,
day, 99% down for 3 days straight. So you could wake up, short it, go to sleep, wake up, do it again,
right.
go to sleep. Even better if you held it the whole time, but I mean, you had to be a
Yeah.
god to predict that. But I mean, I have a feeling these guys lost a lot of because of Luna. So
Yep.
I wouldn't be surprised if the previous article took that into account as far as their net worths, if that was directly subtracted from, like, what these companies are holding as far as, like, internal capital, because it took a
Right.
huge hit, I'm sure.
Yeah. You know what I mean? Really, at least their capital, I'm sure, is mostly based off of their stock holdings in their own companies, which, the company's balance sheet is, of course, referenced in that valuation. So these exchanges are losing a bunch of money to things like this. That's surely going to have an effect.
Exactly, and that's why it affects their net worth directly.
Right.
So yeah, I mean, pretty crazy. Definitely something that happens like once in a cycle kind of thing. So
Mm-hmm.
there, if you miss this one, there always will be another one in the future.
Sure. Sure. All right. So let's see. Getting on to the next story here. Talked about this briefly today, but the largest stablecoin USDT briefly depegs as market plummets. So the world's largest stablecoin lost its peg briefly on Thursday amid extremely volatile conditions in the cryptocurrency market. USDT momentarily depegged to 95 cents, but has recovered to 99.21 cents during the time of writing. Amid USDT's slight drop, other major stablecoins such as USDC, BUSD, and DAI were all seen gaining small points to $1.01. Despite the
Yep.
fact that Tether has previously faced controversy regarding the transparency of its reserves, it continues to be a major part of the cryptocurrency landscape. However, the price fall is the biggest seen since March 2021, raising concerns about an asset that is crucial to the stability of cryptocurrency markets. But USDT's Depeg is less significant compared to UST's Depeg. I think that's pretty obvious. We've talked about that a lot. But so we
Yeah.
won't finish this here. But obviously USDT has not had it as bad as UST.
I'm I'm surprised by this because I was not aware that Tether was the largest stablecoin.
Yeah,
Um, I was talking about it earlier. I've had people ask me like why I have my money in a certain stablecoin, and I always tell them like I did research and Tether is probably one of the most sketchy ones.
right,
And people are like, huh? Like nobody has done their research on stablecoins. It still blows my mind. And the fact that it's still the largest stablecoin is scary. Like,
right.
please take this as a sign to go and research stablecoins and find out where you're putting your money.
For sure.
The three mentioned by the article went up for a reason. They're very good. They have monthly audits, and it's just I encourage you guys to really do your research on stablecoins because Tether should absolutely not be the top largest stablecoin. That is very scary.
Yeah. No, I agree. Um, and people should definitely do the research, of course. But at the same time, like, I don't blame people for just trusting stable coins. I mean, it's become extremely mainstream and they're called stable coins, right? Like, I mean, I would say 80 to 90% of people don't know how banks truly work with like all this lending that happens. And, I mean, if everyone went to the bank, withdrew all of their money, the bank wouldn't be able to give everyone
Mhm.
their money just because of how the, inside infrastructure of banks work. And that's just not common knowledge in the same way that how stablecoins operate is not common knowledge. People just inherently trust them because they've been made mainstream, and they're just there's never questions to why they shouldn't be able to trust them until something like this happens.
Exactly. So the fact that it only went down by 5 cents and it's back up to where it needs to be, take that as a warning sign
Right, right.
and do your
Yep. I mean, I remember I saw UST when it was just slightly losing its peg, and I was like, oh, that's interesting. And if I would have shorted both Luna and UST right there, would have made so much money. But really, I am not in the mood to trade in this market, so I just took note.
shoulda, coulda, woulda.
Right, right. So getting on to the next story here, we got a leaked report saying that South Korea wants to establish crypto framework by 2024. So the administration of the newly elected president of South Korea, Yoon Suk-yeol, wastes no time in his drive to maintain the country's stature as a center for innovation, as South Korea hopes to roll out comprehensive crypto legislation in 2023 and institutionalize the sector by 2024. On Wednesday, South Korean newspaper Kukmin, citing a leaked governmental document, reported that the administration is looking to introduce the Digital Asset Basic Act, the DABA, in the next year and to follow it up with more legislation by 2024. The bill is part of the 110 policy aims that the new president introduced earlier this year. The bill will be drafted in accordance with international norms and will rely on the experience of the world's largest economies, as the local Financial Stability Board will cooperate with the Basel-based banks for international settlements and United States and European Union regulators. While there aren't many details, what is known looks quite optimistic for the industry. The government plans to expand the existing infrastructure for crypto to fiat transactions, allowing more banks to create their own platforms for fiat to crypto exchange. Currently, there are only 4 banks in the country that have this capacity. Also, the South Korean authorities expect to institutionalize non-fungible tokens and introduce a regulatory framework for initial coin offerings. I think it's surely good to see South Korea kind of really taking a lead on making some sound regulation that people will know how to follow. And it won't be so much of a gray space. We've talked on here before about how much of an issue it is trying to apply, typical security laws to crypto laws. It just makes everything a case-by-case basis, and there's really no clear answer for any step that you want to take, and requires vigorous meetings with lawyers and really just walking around a minefield whenever you try to do anything in respect to building in crypto.
Yeah, we talk about it a lot. Regulation needs to happen, but it needs to be smart regulation. I think they're going about it the right way, and it's definitely something that is necessary to move crypto into the next phase, which is hopefully a positive new cycle. So yeah, I love it. Hopefully they get it down really well and they can become a model for other countries to kind of lean on them for advice and grow as well, because there's a lot of potential and a lot of future in crypto.
Right. Yep. No, I agree. And really, it's just a immature market, and that's why we're seeing these growing pains. But it's very clear that it's here to stay. So let's see, right here talking about CBDCs. The issuance of a central bank digital currency is also on the table. The Bank of Korea completed the first phase of its mock testing in January 2022. The Yoon administration already confirmed the validity of the leaked document, noting though that this draft is not the final one. On May 3rd, Yoon Suk-yeol announced he would push to defer taxation on crypto investment gains until the Digital Asset Basic Act is enacted, which means at least until 2024, under the new crypto taxation rules, the government will levy a 20% tax on crypto gains above $2,100 a year. Hours after Korean media reported on the leak, Yoon Suk-yeol met with Central African Republic President Faustin Archange Tudera. Oh man, I'm butchering that, but you can see it right here. To discuss cooperation between the two nations. In April, Tudera signed a bill introducing a legal framework for digital assets, as well as making Bitcoin a legal tender. So
let's do it.
Right? I think as sure, these countries that have made Bitcoin a legal tender aren't, people probably don't think too high of them right now, just with the state of the market. But, really, I think it's going to have a good impact overall for their economies for sure. Just introducing more ways for people to spend money, right? Like, why would you not want to allow people to spend money in more than one way? It's just adding extra money to the economy and not taking away money in any form. So
no, it's another revenue stream,
right? And I think I don't know, I think the US is going to wait to see how some of these things play out for these other countries that are taking the actions that they're taking and move accordingly. But yeah, hopefully we've got a bright future ahead of us. That's what it's looking like. Surely it's going to take time and patience and lots of learning for everyone. But it's just exciting seeing such cool technology really pick up speed in the world.
Yep. And if you're still here listening to this podcast, chances are you will stick it out. So, like Hobo said, we have a bright future ahead of us.
Right. Yeah. If you're listening to this podcast at all during this current market, chances are you're sticking it out. So,
Exactly.
just keep on working, keep on learning, build if you can. It's a great place to be. Surely it takes some grit, but the opportunity is immense for sure in far more ways than just one.
Absolutely. I say in my personal life a lot, nothing worth doing is easy.
100%.
And it's something I've always stuck to, and crypto is no different at all.
Right. Yeah, no, I definitely agree. But it's always better with friends, right? The people that I don't know.
Yeah, get nuked 99% with the gang.
Yeah, I mean it's true.
Hey, no, it absolutely is.
Yeah,
So make
pain
sure you
lo-
guys, find a good community that you can grow together with.
Yeah,
I'm very thankful the CoinScan community is really tight knit and really positive. I mean, if you're in CoinScan community and you don't even know there's a crash going on,
right, right,
like
right.
everybody's calm, just having a good time, and it's awesome. So
Yeah,
find yourself something like that, and and get some friends along the way, and grow and learn together.
yeah. I mean it's crazy the relationships that you build with people when you're both losing and making lots of money at the same time is it's quite an interesting relationship. I mean there's Yeah, I don't know. It's just an interesting situation, but it's plenty of fun nonetheless. It feels very adventurous just from the comfort of your own home. Uh, but of course, there's risk and it's not for everyone. But that is just something that you will have to decide.
For sure. Well, I think that about wraps it up for this week, right, Hobo?
That it does. Surely an exciting week for better or worse. We'll go ahead and end this on the plug for CoinScan as we always do. Uh, if you're still trading in this market, it is an icky market, especially in DeFi. There are naturally going to be a far larger amount of scams, malicious tokens, etc. So really, you should be doing everything you can to make sure you're staying safe. And if you aren't, I just don't know what to tell you. And so CoinScan, we show you everything that you need to stay safe, from token taxes, honeypot status, developer transactions, as well as pending buys and sells, right? And so you see all of these transactions, whether it's developer transactions or buys and sells, as soon as they are queued. So you'll see them before they are completed and have almost a futuristic insight into what's coming for a token, keeping you safe, keeping your friends safe, and ultimately saving you money, especially in times like these. That's what we're here for.
For sure. And as a veteran DeFi trader, I'll tell you that in bear markets, and especially with large crashes like this is when the scammers get really hungry and really desperate. So having a tool like CoinScan to help you avoid those is crucial, especially in this market. This market is all about capital preservation, and you need to make sure that you are trading smart and you have every advantage possible to avoid losing money and feeding these scammers.
Right. Yeah. Well, this has been another week of the Crypto Club. I believe this is episode 4. Um, it's been lovely having you join us. We hope to see you again next week. And stay safe, stay sane.
And make sure to subscribe.
True. Yep.
See ya.